Hey everybody, it's Scott with the Davis team. Welcome to another Wow Wednesday, Words of Wisdom. Today we're going to be talking about FHA loans and student loans, which is not as boring as it sounds on the surface, so stay with me. FHA announced recently that they're lowering their student loan requirement for payments from 1% to be counted against potential home buyers to a 0.5%. May not sound like a whole lot on the surface, but it's tremendous when it comes to buying power. FHA is a government housing loan, requires very low down payment, and you can have a little credit score bump, a little less down at 3.5%. It's backed by the government, or HUD, which is the Department of Housing and Urban Development. It's a fantastic program. It's not just for first-time home buyers, but it's really good for first-time home buyers. And again, those folks that may have had a bump or two here along the road with their credit scores. So really quick, this affects the DMV, which is DC, Maryland, and Virginia areas, and high-cost areas a lot more than any others. This is a nationwide program for FHA, but in areas that have higher sales prices, the impact of going from 1% payment against you for your student loans to 0.5% makes a tremendous difference in what you can afford to buy. A quick example. Let's say a family makes $8,000 a month for their income, and their monthly liabilities. They have credit card debt, say $150. They have maybe a car payment. We'll call it $300, $350, something like that. Student loans. Let's say they have $80,000 in student loans. The old calculation required an $800 a month payment. The new calculation is $400, and we'll get into that difference here in a second. And throw some other things on there. Mortgage insurance for FHA, which is the life of the loan, for the most part, is, we'll call it $250, $270, something like that. And we'll go down to taxes, insurance. That's going to be somewhere around $500 a month. You add all those things together, and with that old payment, that $8,000 a month family household income qualifies you for about $350, say $340 to $360, somewhere in that range as a loan amount. So your down payment is higher than that. So it's a sales price of somewhere around $380 or something like that. But you take just that one student loan payment, and you go from $800 down to $400. Now you go from a sales price of the $375 range to a sales price of the $460 range, $450 to $460. A tremendous advantage in buying power, and it opens up a lot of homes for you. You can go from a condo to a townhome, or from a townhome to a single family. Obviously, there's a lot more factors in there, but just this one benefit is huge for folks that are going FHA and going for and that have current student loans. So if there's any more questions, I'm going to wrap it up. Please reach out to me directly at 703-209-3138. And again, Scott with the Davis team, have a fantastic week and a great Wow Wednesday.